Over the last year, Bitcoin is up 16-fold. It sits at over $16,000 per Bitcoin. And I want to talk about some of the price action because this right here is a little bit unusual where you have this rapid spike up. A lot of people think that this is a sign that Bitcoin is in a bubble, but I just want to talk about the factors which influence the price. Now, there are a lot of people who have held Bitcoin because they believe it's going to go really, really high. Some people have held it as an investment, and with the recent run up, they've sold out their Bitcoin. So anybody who has wanted to sell Bitcoin at any price under this has already sold out. The miners produce about 75 Bitcoins an hour, and I want to talk about the effect of that on the price of Bitcoin. Let's look at a recent block here, and the transaction fees for the block were $57,000, and the block reward was $209,000. So like the block rewards 12 and a half Bitcoins, and this is probably a little bit under 4 Bitcoins right there. So every 10 minutes, the miners are getting Bitcoins, you know, which add up to about $266,000 every 10 minutes. Since the miners invest a lot of money in electricity and the computers to find the blocks, they have like a serious investment in this. And when they get their mining rewards, they're probably going to sell it. So there's some downward pressure on the price of Bitcoin at the current price. Let's estimate how much that pressure is. So $266,000 for every 10 minutes times 6 for an hour times 24 for 24 hours in a day times 365 days in a year. So that's about $14 billion of mining rewards that the miners are going to get, and they're going to sell the Bitcoins when they get them. So this is downward price pressure on the price of Bitcoin. It's one factor which will, over time, it puts downward pressure on the price. But let's think about the other side in terms, like this is a large number, but there are other large numbers to think about too. One would be the monetary base for the United States, and that's almost $4 trillion. And thinking about the inflation rate for the United States, and that is right here, 2.2%. So if you think about the monetary base times the inflation rate, uh, just simply holding cash, people lose roughly $85 billion in value every year through inflation. So the reason why this is significant is all government monetary systems cause people to hold cash to lose money due to inflation. Now, Bitcoin is capped in terms of the number of Bitcoins that there are. So if you own Bitcoin, you are immune to the effects of losing money through inflation because nobody can print more Bitcoin. With any sort of government, they can print more money and they can devalue the money that you have just sitting around. And it's not just for the United States, but all the other major countries. Of course, the United States is biggest, but all the other major countries have inflationary monetary systems where they can print money at will. What Bitcoin represents is a refuge from the impact of inflation. So that's one factor which would compel people to buy Bitcoin even at this high price. Another thing to think about is the size of the U.S. economy, which is $18 trillion, or the size of the federal budget, which is $3.8 trillion. So $14 billion doesn't seem like a lot in comparison to that. I own some Bitcoin, but I'm not, I already have my fill, so I'm not going to buy more at this price. If you do want to buy Bitcoin, you can go to Coinbase and use my referral code to get $10 free dollars worth of Bitcoin if you buy $100 of Bitcoin or Ethereum or Litecoin. So only buy don't buy, don't go out and like, I'm gonna, go and don't go out into credit card debt to buy Bitcoin. But if you have some extra cash laying around and you want to play around with this because it's a very, very interesting thing, then you can go to Coinbase and get some Bitcoin.